thank you so much for making time in your busy schedules to join us today. My name is Matthew Wan, and I'm the manager of the Program and Funding Administration team here at the Region of Peel. I am looking out the window in front of me. It is a little bit on the dreary side today, but hopefully many of you were able to enjoy some of the milder weather that we had certainly yesterday. And, just keeping our fingers crossed that that's a sign of some more things to come this long weekend. It's also very symbolic, I feel, because as we're moving into spring, I think this is just kind of the natural time that we're both wrapping up some of the work that's behind us, but also looking forward to what's ahead. And it's really in that spirit that today's focus is upon supporting you through the 2025 CWELCC reconciliation. So without further ado, let's get started with some housekeeping items. So first of all, please note that as usual, today's session is being recorded. And so by staying on this call, you are consenting to this recording. Once the recording is available, we'll be sure to share the link and the slide materials for you and your team to review. I'd also like to ask that during the teleconference, you please keep your microphones muted and cameras off. That's just to minimize some of the distractions. And also during the Q&A segment of our time together, if you would like to come off mute to be able to ask your question verbally, please just raise your virtual hand at that time, and then our moderator will be sure to call upon you to unmute and ask your question. If for whatever reason we are not able to address your question on the call today, we just encourage you to please reach out to one of your wonderful early year specialists, and they'll be sure to support you the best way possible. Moving on to the next slide, as a refresher, we continue to use the Q&A feature in Microsoft Teams during our teleconferences, and that's just so that we can address as many of your questions as possible while keeping the conversation focused. So on this slide, you will see just visually the Q&A icon, which should be on your screen as well. This is where you can click to open the Q&A window. And if you have a question, you can simply type it in and click the Ask a Question button. You also have the option to be able to view the questions of other participants. So you have the option, you can just upvote a question if it seems particularly relevant. And this will help us to prioritize the most common or urgent inquiries as we move through the session together. Regardless of how it is that you choose to ask your question, please just ensure that your questions are clear, concise, and communicated in a respectful and professional tone. This just helps us keep the session productive and focused. So now onto our agenda. We have 4 exciting topics to get into today. So beginning with some updates related to some important reporting dates and impacts. Next, we'll be spending some time to talk about the reporting of actual base fee revenue and any extenuating circumstances that you might have experienced this year. Thirdly, we'll be diving into a new approach to 2025 recoveries to support you better with your cash flow management throughout the year. And last but not least, we'll be providing an overview of what to expect during the reconciliation of your 2025 CWELCC funding. With the remaining time that we have, we'll try our best to answer as many questions as possible. So let's get into it. Moving on to the next slide, our first topic relates to key changes to the 2025 FAIR template. As you can see on the screen through the table, as in years past, the FAIR continues to be a helpful financial reporting tool, which breaks down the details that are provided by you in your audited financial statements. What's new this year is that the scope of the FAIR template has been expanded to integrate all of the reporting requirements for the 2025 CWELCC reconciliation and the ministry's standardized financial report. So it's a little bit broader in scope. And as a result, you may notice a few more tabs, such as the allocation and operating plan, Peel Region grants, and key performance indicators. So, from a glance, this year, the FAIR is bigger, it's bolder, but ultimately it is designed to cut down on the sheer number of templates that you will fill out and to avoid duplicate reporting. For our friends on the call who operate multiple sites in Peel, it's important to note that this is the first year that you will need to report your expenditures on a site level basis. And if that is the case for you, then the team has already been in touch to develop a customized version of the FAIR template to support you with your site level reporting this year. Moving on to the next slide. So as with any new template or change, we do want to ensure that you are supported through the process. So on this slide, I'm just going to highlight a couple of important reminders, beginning with the audited financial statements, such as this new requirement to add note disclosures within your audited financial statements. You also want to ensure that a consolidated statement of revenue and expenditures for Peel sites only is provided if you operate in multiple jurisdictions. And if applicable, please make sure that any management letters that are issued by your auditor through their preparation of your audited financial statements are also included in your submission. Regarding the FAIR template, some things to note. You will want to ensure that you are filling out each tab going left to right, ensuring that all green cells are completed. And then once you have filled out all of your information, it's a good idea to do some double checks on, some of the total revenue, expenses, assets, liabilities, loss or surplus. You want to do those double checks to ensure that these amounts match with the amounts that are within your audited financial statements. One of the areas where we've received a number of questions and also raised a couple of our own relates to the proration methodology that you're using. And that is, of course, for those of you who serve 0 to 12 children. So when filling out your FAIR, please give special attention to the method that you're using and including the relevant notes if that applies to you. And last but not least, when you are taking a look at that final tab, I believe it's A8, the FAIR template should also provide you with that amount that you'll need to enter into GovGrants. And in some of the following slides, I'll actually provide an example of that. Now, I know that this is a lot of information. I think the good news as we're approaching this season of reporting is that if you need a full list of the requirements, we have developed a couple of helpful tools this year in addition to the Trustee Service Provider Handbook. And so once again, new this year is Peel Region's Accounting and Note Disclosure Guideline. That is something that's designed so that you can share that with your auditor. It's really to speed up and clarify some of the requirements that we have with audited statements. We've also prepared a separate guideline, which is designed to walk you through step by step how to fill out the FAIR template. And you can also check YouTube because we've posted some links that provide you with those step-by-step instructions as well. All of these supports are designed to really assist you and your accountants with your submissions. But of course, if as you're going through the reporting process, you have any specific questions, we really do encourage you to reach out so that we can support you in your specific situation the best way possible. Moving on to the next slide, I think it might be helpful to just give a really quick walkthrough of that way that the FAIR template is designed to simplify some of your GovGrants reporting this year. So for illustration purposes, this is a lot of numbers on the screen. I'd like you to focus your attention on that single cell that is highlighted in yellow. So after you've completed the entry of all of your data into the FAIR, the template automatically calculates your actual program costs. That's the cell that's highlighted there in yellow, which is the total amount of expenses for this period. So in the example on the screen, the total amount for this service provider is $1,384,300. Now I want you to just grab a hold of that number as we move to the next slide. Which is a snapshot of what you should be seeing when you log into GovGrants for your reconciliation. So you'll want to take that amount, which is your actual program cost from the year that the FAIR has provided you with. And when you're performing your reconciliation in GovGrants, you want to give your attention to that small pencil icon.
Matt, I'm just going to mute the group, sorry.
Yep, that's fine. Thanks, Alicia. So once again, you'll want to take this total amount when you're performing your reconciliation in GovGrants, and give attention to that little pencil icon, which is highlighted with the red box. So you can click that pencil icon to edit and report the same amount, $1,384,300, as spent this period for the actual program cost category. You do not need to report your expenses on a line-by-line basis for your CWELCC reconciliation. And we are currently working with the developers who set up the GovGrants platform to ensure that this is just simplified so that only the actual program cost field is editable to help to reduce the confusion and just streamline the reporting. So hopefully that is just a helpful illustration for how the FAIR template is supporting you with simplifying your GovGrants reporting for this year. So begin with the FAIR template, your audited financial statements, and then when you're reporting in GovGrants, that process should be a lot easier for you. So let's move forward to the next slide, where we're going to take a moment to underscore some of the importance of the reporting deadlines related to 2025 CWELCC reconciliation. So that's, of course, your audited financial statements and FAIR with site-level data if you operate multiple sites. So recently we've heard that there might be a number of concerns from some providers in meeting this deadline of April 30th, as well as some questions related to why there is this increased urgency this year. And so if I may, I do want to speak a little bit and just provide a little bit of context as well with some of the reporting requirements for this year. So first of all, if you've operated in Peel for some time, hopefully this April 30th date is already familiar or is growing more and more familiar, because we typically do require that audited financial statements are submitted 4 months after your fiscal year end. And of course, in prior years, we've worked with the sector to ensure that everyone is aligned with that December year end date as well. What is new this year is not necessarily that April 30th deadline, but it is an increased amount of pressure that we're feeling from the ministry to be able to support standardized financial reporting data by June 1st. That is the deadline that the ministry signaled to us last year. And, once again, as we shared in a previous teleconference, and just wanted to give an update today, we have reached out to the ministry for flexibility, understanding the challenge that folks within the sector are having in terms of finding auditors and such. They have remained firm with that deadline. And so, when it relates to flexibility related to that date, we really are kind of caught in the middle and don't have a lot of give on that deadline of April 30th. I think coupled with that as well is our intention to be responsive to some of the feedback that we've received last year, reporting to how it's important that allocation adjustments happen as soon as possible to support the sector in budgeting appropriately. We've heard that in some cases last year, some of those late year adjustments really did even contribute to financial viability issues, which is definitely something that we want to improve upon from last year. And this is yet another important reason why these timely and accurate reporting is so needed. So the sooner that we can receive this reporting information, the faster we can actually commence with the work of reconciling your funding, which is of course a necessary step before we can finalize any further allocation adjustments this year. So that, once again, it just gives you a little bit of context into some of the pressures that we are also trying to navigate with the ministry, but also some of the work that we really do want to do in supporting you with those timely allocation updates. So moving forward into the next slide, given some of these timelines, we've tried to work proactively with the sector this year to communicate some of the impacts that will, relate to late or incomplete submissions. So these items were already shared through a memo to the sector as well as through your individual EYS, but I will take a moment to just kind of restate some of them again here. So this year, in order to be eligible to apply for one-time emergency funding, you do need to submit on or before April 30th. If you are late with your submission, of course, we will still accept your audited financial statement and your FAIR. However, you will remain ineligible for one-time emergency funding this year. If that lateness does persist for 60 days or more, in line with our existing compliance policy, we did alert everybody that As we state within the policy, there will be a hold that's placed upon CWELCC funding until a complete submission has been received. So, although these compliance actions are a part of our existing compliance policy and service agreement, in the past, of course, we've tried to show some flexibility where we're able to. As I mentioned in the previous slide, this year, we're not receiving any flexibility related to our commitment to the province to report back on some of the data. But once again, we also do need your support in submitting these documents, not only so we can meet those ministry requirements, but also to avoid any delays in processing your CWELCC rolling top-up. This is an important point for any centers that were in receipt of legacy funding and or growth top-up. Because your approved reconciliation data is needed so that we can calculate your rolling top-up update. Because the rolling top-up does factor in your total 2025 eligible expenses. So again, we'll have a teleconference with more details on our approach to the rolling top-up in the month of May, but depending on what is reported through your reconciliation and what is approved after our review of your expenditure data, this may result in a change, whether an increase or a decrease in terms of how much CWELCC funding you will receive. So please, once again, just urging you, engage with your auditors, make use of any of the tools or the materials that are available to support you, and also reach out if we can help as well in any way. Moving on to the next slide, our next topic relates to the reporting of actual base fee revenue. So on this first slide, this is actually a blast from the past. Not too distant past. You may recognize it if you attended our teleconference in November of last year. And at that time, we really did want to walk you through this slide, which has some helpful information to understand how the cost-based funding formula calculates that maximum amount of eligible costs that are covered. And that is, of course, your program cost allocation. So this program cost allocation is comprised of your base fee revenue plus your CWELCC funding. For 2025, the funding formula calculated your expected base fee revenue, which is that estimated amount of base fee revenue collected when your center is operating at 90% capacity. That remaining 10% through the allowed vacancy rate is covered under your CWELCC funding. And so your CWELCC funding received ensures that your program is fully funded by filling up that 10% gap through the allowed vacancy rate, because your maximum eligible program costs and your base fee revenue. During the reconciliation, you will be asked to report your actual base fee revenue collected. So after the full year, what was the actual amount of revenue that you collected from parents and families? If you collected more base fee revenue than what was expected, your CWELCC funding is correspondingly reduced, and this amount is considered an overpayment and recovered. If you collected less base fee revenue than expected, your base fee revenue offset remains in place, and that difference for operating less than the expected rate is considered as a loss. And at that time in November, and further details I'm going to provide in today's teleconference, we realized that in that second scenario, there might be some situations where factors such as different types of extenuating circumstances could have contributed to that lower actual base fee revenue collected. So I do want to talk about our approach during reconciliation a little bit on the next slide. So to give you a little bit of context, the ministry has allowed service system managers a limited amount of discretion in situations where the actual base fee revenue is less than what was expected. Once again, this is frankly the first year of the CWELCC cost-based funding model, and it's been quite a year. It has been a year that's been full of lessons, I think, for everyone on the call, as well as us as service system manager. And so in this first year, we do understand that there could be a need in some extenuating circumstances to look at where we as a service manager can exercise some flexibility. And so what I'm going to do is just walk you through some of the details on this slide, which describes the proactive approach that Peel is going to take through the reconciliation this year. So during reconciliation, we will begin by reviewing the actual base fee revenue that's reported to identify those service providers who operated below 90% operating capacity. Secondly, we'll also be assessing how much potential recovery of cost-based funding is available. And thirdly, we'll be reaching out. We'll reach out to each of these service providers to request some additional information related to some of the specific circumstances that took place in 2025 that could have contributed to this less than expected actual base fee revenue, as well as the scope of that financial impact. Now, I know that the last thing that anybody wants right now is additional reporting or additional information, but I just do want to underscore that in order for us to exercise any type of flexibility, this is really just some of the key information that we do need to be able to assess, was this a normal operating variance, or was there some sort of an extenuating circumstance that did take place? After we've assessed that information from those service providers, where warranted, we will look to offer some support in the form of reducing that overall recovery amount. We will also be assessing on a case-by-case basis situations where, perhaps the operating variance is greater than the available recovery amounts. Again, our goal through this process is to better understand some of those specific situations which may have applied to your centers, but also to identify those key themes that are happening across the sector so that we can incorporate this into a clear policy that we can apply in 2026 and moving forward. So overall, I hope that this is somewhat welcome news. I would just say that we do try our best in places where we are able to show some flexibility to really offer it where we're able to. And then, of course, in some of those situations where we have very limited or no flexibility, such as some of the deadlines that we talked about earlier, we do have to be a little bit more clear and firm, okay? But overall, we are going to try to take a supportive approach this year as it relates to the actual base fee revenue that was reported. Moving forward into the next topic, it has to do with supporting your viability and a change that we're going to be implementing to our recovery approach. So on this first slide, I will just say that the team is always really responsive and interested in some of the feedback that's provided by you, and we're looking for those opportunities for continuous improvement. And so with respect to that reconciliation and recovery process, we have heard some feedback from the sector over the years to highlight just a couple of themes. First of all, we have heard that there are some cash flow issues that arise, especially related to when there's the timing of recoveries that are triggered later in the year. And we've heard that last year, for example, there were some service providers who had some additional cash flow challenges in the final quarter due to some unplanned recoveries late in the year. Secondly, we do continue to work with providers related to your budgeting and your planning. And what we have heard is that any earlier notification about recoveries or allocation changes are always something to strive for so that we can help you in budgeting appropriately. And lastly, this is obviously something that we've heard before in the past. It's that the timeliness of these reconciliation reviews is something that we should continue to strive for, which just makes total sense. When that previous year is still fresh in your minds, it is, of course, best to ask those questions earlier so that we can ease some of that administrative burden. And so in response to some of that feedback, on the next slide, I'll walk you through a process that we are implementing this year, which hopefully is a step in the right direction. It's an initial settlement and recovery. So the accountants on the team have explained this to me as a process that is, very familiar to the approach that's taken by the Canada Revenue Agency, the CRA, when they're processing individual income tax. So as you know, April 30th is that deadline to submit your audited financial statements in FAIR, as well as that total expenditure amount within GovGrants. And what Peel Region will do this year is we will verify that total expenditure amounts in the AFS and the FAIR and Gov grants each match. We want to make sure that they agree with one another. And then that box that's in orange, if applicable, once again, we will identify at that time any service providers whose actual base fee revenue was less than the expected base fee revenue, and we'll be reaching out to ask for some information. But from there, whether the box in orange applies to you or not, after we've completed those steps, we will take that information that was reported in the FAIR and the audited financial statements, and we will process an initial settlement. So we will approve those amounts as you reported them to provide you with that initial settlement. That's a process that's very similar to your income taxes. You report that information to the CRA, and then you receive that initial notice of assessment. So as usual, after that step, we would commence our reconciliation review for the entire sector. That'll likely take place in the second and the third quarter. And during that reconciliation review, there could be some instances where we reach out to ask some additional questions about specific expenses. And if it's determined that there is an expense or a couple of expenses that were reported in error or are ineligible, there could be a further adjustment. Now, the key benefit that is realized through this initial settlement approach is the increased predictability. By providing that initial settlement ahead of that full reconciliation review, it's designed to support you so you can better budget and plan for those recovery amounts earlier in the year. It also helps to prevent any of those late year financial shocks through the accumulation of large unexpected recovery amounts. It might be helpful to walk through just a very quick example on the next slide to illustrate how this initial settlement would work alongside the reconciliation process. So if you take a look at the table, especially the column in blue, at year end, this service provider reported the following actuals as part of their reconciliation, which resulted in an initial settlement of $64,000. So that is $50,000 of surplus in program cost allocation that they were not able to spend. So any surplus is recovered. This service provider in the second row also collected $10,000 more in actual base fee revenue. And of course, that amount is also recovered. Then thirdly, there is a corresponding adjustment to the amount in lieu of profit and surplus of $4,000, since that amount in lieu of profit and surplus is calculated based on whatever the actual program cost is. So once again, the benefit in triggering this initial settlement based on what was reported by the service provider, validated in their audited financial statements, is that as early as June, this recovery of $64,000 could be triggered. It could be budgeted, it could be planned for. If there is support that's needed in terms of a repayment plan to support with cash flow, that is all stuff that could be worked out earlier on in the year. And then as the reconciliation work is underway, in the case of this service provider, it was later determined that after reviewing all of the expenses that were reported, there's a further $1,000 recovery that was needed. So this further recovery, plus the adjustment of the amount in lieu of profit and surplus, is then triggered. And that's what you see in the final column, which is an additional $1,080. But once again, through this approach of an initial settlement, we have worked to reduce that risk of a late year financial shock through that initial settlement. And that's what it's designed to do. It's, again, to support you in predictability and managing your cash flow. So hopefully that's a helpful example for you of some of the approach that we'll use this year to support you with your cash flow. Moving forward to the next slide, we'll get into our last topic. The final topic is about 2025 CWELCC reconciliation. And the purpose here is to give you an overview of what it is that you can expect with these reconciliation reviews. So moving to the next slide, the purpose of the reconciliation review is to ensure that all of the expenses that were reported meet the eligibility criteria for cost-based funding. So this year, the reconciliation will be completed by one of two people. So either Region of Peel staff which is the typical process, or a handful of third-party auditors, which are third-party auditors, which we've contracted with to be able to do some direct engagements to report on compliance. Now, regardless of which of the two approaches is selected for your center, the end result is the same. We are doing these reviews to ensure that the costs meet the eligibility criteria of being attributable, appropriate, and reasonable. Now, the one area where we've received the most questions in the past year is on that topic of reasonability. And so just to speak about that a little bit further, when we are assessing what is reasonable in this first year of cost-based funding, our objective is to try to leverage data so that we can have a consistent process and equitable approach to our assessment. So as a starting point, we do plan to leverage current and prior year expense data and also objective measures for year-to-year variances, such as the Consumer Price Index. And that's so that we can develop some comparable sector benchmarks for providers of a similar size. In this first year, the data will not be perfect, to be quite frank. And so as part of this process, before we make any types of adjustments to your expenses or your reconciliation data, we will of course include those steps where we reach out to you for clarity and for context. Just because an expense is higher than a calculated sector average, it doesn't necessarily mean that it's ineligible. And so in many cases, that context from you as a service provider will be really important. So we will, of course, factor that into our assessment. Moving on to the next slide. Again, there are two kind of categories or two groups of people who will be conducting the reconciliation review. Either or will apply to your center. And so as in years past, the majority of service providers will receive reconciliation reviews conducted by Peel's POSA team. To cut down on the number of questions and back and forth, we'll try our best to leverage data that's already on hand to better understand your expenses. So for those of you who serve 0 to 12 years of age, this might involve reviewing your school age reconciliation reports to ensure that there is some consistency in the way that expenses were prorated. And of course, for our friends who operate in multiple sites in Peel, please be prepared to explain if you have expenses that are at head office level that you distribute on a site level, please be prepared to just explain some of your rationale or the way that you've broken down your expenses. If clarification is needed as we review your reconciliation, we'll reach out by email with some questions about your reconciliation report. The goal here is not to trip you up. It's not to make this a long and drawn out, painful process. We will reach out with questions, and based on the information that's provided by you, we will need to make a determination about whether the expense is eligible or ineligible. And this is really where that supporting documentation benefits you. So if you have that information that's readily available, whether it involves receipts, whether it involves some of your methodology for how it is that you're prorating expenses or decisions that you made this year, please have that available because it should support those conversations and ensure that they move along well. Moving on to the next slide. So let's talk a little bit about the direct engagement to report on compliance. So we are currently working with our 3 third-party vendors to ensure that there is some consistency in their approach to reconciliation reviews. Now, for some, I will just say it might be a little bit nerve-wracking, the idea of having a third-party auditor contacting you to conduct your reconciliation. And so I will just say a couple of words to familiarize you with the process that'll be used this year. So the type of review that these third-party auditors will be conducting is called a direct engagement to report on compliance. In plain terms, it is essentially an independent review of whether an organization followed a specific set of rules or funding requirements. So this review involves looking at what was reported, and the supporting documentation, and then providing an opinion of whether the organization complied with the requirements. So from an operational standpoint, I will say that it is very similar to the approach that is used for reconciliation and eligibility review work that's conducted each year by the purchase of service analyst, by the POSA team. So then you might ask, well, hang on a second, if it's very similar to the work that is done each year, why then do we need to contract and go with a third party? The short answer to that is because the ministry says so. So the ministry has directed all service system managers this year to conduct these reviews on 5% of the CWELCC centers and agencies within their jurisdiction. Now in Peel, 5% breaks down to approximately 11 service providers or agencies or 31 sites. To just give you an idea of the scope working within Peel. And when we're determining our selection criteria for who it is that is selected to be a part of these direct engagements to report on compliance, just for transparency, I'll share a little bit. We do consider a number of factors, some of which are risk-based in nature. So we might consider those service providers that might have had some previous issues with non-compliance or viability concerns, but we don't just base it solely on that. We also consider a diverse sample that represents providers of different sizes, auspice, LHCC, center-based, single-site, multi-site. We want to ensure that there is some equity that's applied across the center. And along those lines, some of the things we also consider is incorporating some of those who have not been chosen for this type of review before in the past. So there is also some routine sampling that goes into it as well. Again, we will be working with these 3 vendors to ensure that the process that they use is consistent and as streamlined as possible. And if you are selected for a direct engagement to report on compliance this year, we plan to notify you in the month of May with all of the details of what you can expect through the review, as well as with the goal of completing that review and wrapping it up before the end of July. So we will walk with you step by step through that process, but that just gives you a little bit of an idea. Again, one of 2 types of reviews will take place, certainly not both to your center this year for the reconciliation. So moving on to the next slide, we're going to close things off with my favorite slide. Okay, so we have saved the best for last. So moving on behalf of the team, I would like to say, again, it was a year of learning. If I can boast about one thing, I would boast about just some of the committed and hardworking people here at the region who are really always thinking nonstop about how it is that we can support you better. And so I'm very pleased to just give a couple of highlights of some things that are in the works this year to support you. First of all, there are a number of senior program and financial analysts who will be partnering with our incredible EYS team. If you love the EYS, you can give a heart emoji right now. You're welcome to do so. Who, of course, already provide some of that excellent support to our sector. But we are bringing some of our senior program and financial analysts to the forefront as well, so that we can offer some even more in-depth support of a financial nature. So the benefit, we hope, is that you can have more of a familiar face for someone. If you're reaching out, you've got your EYS, but you also will have someone who is more familiar with some of your cost structure and some of the questions that you might have of financial nature. The second thing is that there is a new and improved 2026 operating budget template. Of course, it incorporates the new updated 95% occupancy rate that applies this year, but it also has some new features, of course, to better support you if you need to track your 6-12 funding. And of course, it has a helpful built-in repayment calculator. So if you're using that tool, updating it with your actual expense data, it really sets you up for success as you're planning your year-end position. And so try it out. It's an amazing tool, and we'll be coming out with another version of that template for multi-site providers coming up shortly. And the last thing to highlight is in the coming week, the team will be sending out some invites for some optional CWELCC reconciliation drop-in sessions. So these are great sessions if you just have a question, or maybe you just want to join and listen and learn. They're going to be structured in a way to maximize that amount of time for you to bring your questions, receive some guidance, also that you are really positioned well to meet your reporting requirements for this year. And you are, of course, welcome to invite your accountants and your bookkeepers to that session. We really do want to set up those times to support you in the best way. The last slide, if we could, Deb. The only two other items I would highlight here is that there was an update task that was recently sent. It is now completed and the team is working hard on validating that data. Thank you again for participating in that. And you'll just want to stay tuned for our next teleconference in the month of May, where we will be sharing some more details about your 2026 allocation, namely the rolling top-up allocation. Okay, so that was a lot of information. We're going to transition now into some time for some question and answer. Okay, thank you for your patience. I know it was a mouthful. Sonia, could you please take it away and help facilitate this time?